Hello, Maverick traders, and welcome out to your daily market roundup. This is August here, and I'll be going through taking a look at markets for August the 21st. It's a Thursday. Let's get into it. Hope everyone's having a good summer, and we're looking at markets a little wobbly here. So, as always, we'll be taking a look at what's happening in the broader market analysis, and then take a look at what the heat map's telling us. Take a look at where the outperformance and the underperformance is, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at market analysis, let's just jump right into the headlines and the numbers. And today was again a sideways to a little bearish day. Markets definitely is a little looking wobbly here, and we are getting or consolidating right around the support area. So overall, market continues to pull back. And here's the chart for the S&P, and you can see we're just kind of landing right at that 20-day moving average where we are finding some support. Now, if you take a look at that Mag 7 or even the Mag 10 stocks, that's where you see some of the weakness have come through. Now, looking at where we are, can we say that maybe this was a market high for now? Yeah, we probably could. I think we could consolidate a little bit here as we are in that peak summer trading environment, where we get some lack of participation. But after the Labor Day, expect some more volatility kick in, and then we'll find out where the market's going to go from there. Now, when I take a look at the headlines for the day, market, especially outside the stock market, in the bond market, we did notice some movement. The bonds did, the yields did rise after the first. We had a good economic data. Those PMIs for manufacturing and services were better than expected, but we also had the yields that went up because we got some hawkish comments from one of the Fed member. So that's really where I think we are. If you take a look at the expectation for a rate cut, I mean, just two and a half weeks ago, we were looking at about 3 rate cuts for the year, and now we are down to 1 rate cut. And even I think as we get closer to the September meeting, again, that number could change as well. And again, I won't be surprised that even though if we get a rate cut, we get a bit of a hawkish cut where, it's one said and done. But based on the comments that we got today, seems like a rise in inflation is still a concern, while other areas of the economy looks fine. So that's really where we are. Now, looking at the numbers for the day, Dow Jones, again, down slightly. S&P was down. Qs were down. Surprisingly, the small caps are up, considering that we are seeing a rise in those yields. Usually those yields kind of weigh down on those growth stocks. But didn't see that today. We are seeing oil markets slightly down, and then we're seeing the gold markets slightly up. So that's really where the movements have been, but you can see that was smaller percentage moves, which again is in line with where we are as far as the seasonality pattern go. Now, as far as the advanced decline ratio goes, I mean, look at this one here, 53% to the upside, 44% to the downside, but then look at the plus minus 50 MA, we are down in the red, 48% already. Remember, this number got down to about 20% at one point, and now we're up to, again, 48%, and then up only 52% above the 50 moving average. So I think underneath the hood, the market still looks a little bit shaky to me. Now, here we are looking at the heat map analysis. As you can see that there's definitely a whole lot of red, but for the week, if you take a look at the numbers for the week, a lot of weakness, big numbers coming out from these big, Mag 7 or Mag 10 stocks. That's really driving the market or the broader markets higher or lower. Now, outside of the S&P, I can definitely see that there's more weakness happening in the tech. The Qs are below the 50, 20, and above the 50. So kind of in between here. So at this point, like I said, I wouldn't be surprised we get a bit of a choppiness, and then we got to either break higher or lower. But again, we'll kind of see what happens over the next couple of weeks. Here we are with the Mag 7 plus the 3 bigger stocks. So these are like 10 major stocks. As you can see, that majority of the gains in the entire summer has come from this. And now here we are This is making higher high, higher high, and here we are making a lower low. I wouldn't be surprised, and I would love to see a bit of a rally, kind of short into, to make that trend changing move. So you can see that this has been pretty much one way, and if you are long on this stuff, I think this is a bit of a first sign to kind of look at this from a bit of a grain of salt and say, is this turning into an end? And I know a lot of traders are going to look at this and say, is this buying the dip opportunity? But like I said, we are between the 20 to 50, a little indecisive here. We could consolidate a little bit before we can really break higher or lower. Now, my outlook for the week, I think probably sideways. Maybe find some support, consolidate around that 20 moving average. But if that really gives up, I think we could see a retest that 50 to moving average. So I think the next couple of weeks kind of looks dicey in this low volatility period. So as always, I have equal amount of longs, equal amount of shorts, focusing on the pockets of strength and weakness and tilting your portfolio bullish to bearish accordingly. Here's the first one, the gold miners. I mean, this thing is looking decent here. After this consolidation period, is actually breaking out. So this is something I'll be paying close attention to as the miners are picking up and see where we're going to get the strength. The second one is Liberty Media, and you can see that I talked about this last week. Got a big breakout here, consolidating a little bit, but still considering as a high base. Moving averages are catching up. I mean, this one still goes in the outperforming list here for me. Third one is Life 360, same thing. Got a big breakout over here and going sideways. We're also getting some movements in the healthcare, like Merck. Merck looks like it's finally doing a lot better here. And then here's the last one. This one again, I think it just popped on my watch list. This is a lower price stock, ThreadUp. But I mean, look at that move here. I mean, so far this has been a greatest mover for this year. I think it was down like $2 stock, almost down to 11, and it still continues to run. So this one, again, I'm watching it closely, especially as the momentum is there for this. Now, let's talk about underperformance. Here's the first one, Apollo Global Management. Getting some bearish crosses here. Look at that, 20 breaking below the 50. I mean, this thing is, or has held up for the most part, is now, showing some bearish divergence. And that's what I'm really focusing on, is getting these divergences where we're getting a bit of a change of the trend. Here's another one, that's Coin, doing the very same thing, getting a bearish sort of a reversal. We did gap lower, going sideways a little bit. Below the 300 or 290 mark, I think this one looks like a lot better, especially if the cryptos does pull back and the market pull back. I think this will be a decent one to short as well. Here's the other one, Intuitive Surgical. This thing is also nicely trending lower, below the 20, below the 50, and kind of going sideways. It did touch that support before a rally. I think this is a bear call spread on this one. It's a decent play here. Here's the other one. It's the Intuit, and you can see the same thing. Below the 20 and the 50, make it a little low base here, and kind of moving lower. So this one, again, like it a little bit more on the bearish side with a bear call spread. And as we take a look at our tomorrow's outlook, I think this market might consolidate here. We might just bounce back and forth, but it kind of looks unclear. If this pullback is going to get bought out, or is this a bit of a turning point here? So maybe we'll find out in the next couple of weeks. But this is, I think, a great time to sort of keep the powder dry. Or if you're trying to pick up a direction, I think this is a good time to kind of load up your portfolio. Let's say if you want to leaning on more on the bearish side, it's a good time to sort of load up on that. See if there's a pullback that could occur in the early part of September. But you remember, like, this is the time where we get more with weakness or more rough times in the markets for the next 45 days. So that's something to kind of keep an eye on. But for now, peak summer trading environments. Don't expect a whole lot, but as always, keep the eye on the ball here and see where things likely to change. Not a whole lot on the economic front. We have the Jackson Hole Symposium. Usually that's a bit of a snoozer unless something comes out of the Fed chair. So that's tomorrow. Keep an eye on it. But outside of that, I think the market's likely to kind of coast here. Yields likely to go a little higher here based on the data, based on the Fed, until the next round of data start to roll. That's where I think we'll see a big acceleration, especially when we get the next jobs report. Until then, be a little safer in the markets. That's all for now. Have a good rest of the day. Enjoy your rest of the summer. We'll be back with as the volatility returns to the markets. Thanks, everyone. Take care.